Benjamin Tallis, Deputy Chief Economist at CIBC Capital Markets. Benny, and I do want to start there, just in terms of what the bank, what the sentiment reading tells us and how out of date it already feels, because it's about, I think, about a month old in terms of when the question was asked, and a lot has changed since then.
Yes, Amanda, quite frankly, I spent exactly 2 minutes reading this report. It's old. It's a month old, which is very old given this environment. Of course, it was before the peak of the second wave. We all know the story. So what the companies are feeling now is very different than what they felt a month ago. It gives us a sense of the starting point, given this new phase that we are facing, but it's not really what they are feeling and sensing at this point of the game.
So in terms of what you would factor in and where you think sentiment might have gone since then, I mean, obviously we don't even know, for instance, Benny, what we might hear in Ontario about even more restrictive lockdowns. We've seen them in Quebec. We've seen Atlantic provinces move even further. How do you think that will play into the sentiment as we move along?
Yes, I have a feeling that if we conduct this survey today, it will be much worse than what it was a month ago, what we are getting now. Clearly, the second wave is a major factor. Pessimism is growing. We all know that. Clearly, the vaccine is a game changer, and they are telling us that's the point. And clearly, this is something that will continue to motivate them to start investing. But obviously, sentiment when it comes to businesses and consumers are down over the past month, given the new developments.
One thing that isn't down, but isn't up, is the rate of delinquencies. We've had this sense that we are in a bit of a holding pattern because we're papering over potential losses. We're papering over potential bankruptcies with all of the government support out there. What do you think it says when we see delinquencies holding at the level? No major change here. Benjamin, do you trust this?
Yes, it's a very interesting situation. Remember, a few months ago, Amanda, we were discussing the deferral situation. 20% of all mortgages were in deferral. People were talking about a cliff, something bad will happen. Nothing happened. It was much ado about nothing. It's down from 20% to less than 1%, the deferral number. So it's not a story. As you see in this chart, the credit card segment, which is the riskier segment of the credit environment, no change whatsoever in 30 days delinquency. Clearly, it's government money. When you have unemployment rate at about 8%, you should see delinquency rising. They are not rising because you have government money in the system, and this government money is going to be there for a while. Even if you look at subprime credit card numbers, they are not rising. No indication whatsoever of bad debt anytime soon. It will come eventually, but it will be a very slow process. So far, so good when it comes to consumer risk, and that's good news.
We are, though, bracing for bad news. We know the COVID numbers continue to rise, continue to alarm. We think that these additional lockdowns are coming. How do you begin to try to factor that in? I'm asking the impossible here, but against the good news of vaccines. Also coming, we can count on it. We just don't know how long it will take. How do we kind of price in the discrepancy there between the bad news that's with us today and the good news on the horizon?
You know, the consensus is that the next quarter will be relatively bad and then it will start improving. And sometimes, sometimes the consensus is right. And I think that's what we're going to get. We're going to get a very, very bad winter. We are starting to see it already, and this is just the beginning. I believe we're going to see some negative numbers when it comes to GDP. Unfortunately, we'll see some businesses unable to continue. Many businesses in the spring told us, if you close us twice, that the second time will be much worse. We will not survive that. And I think we are going to see that. That's why government support is crucial at this point of the game. The number of bankruptcies will start rising. We'll see it. That will be the winter. I think the spring will be much better. Remember, the economy recovered strongly in the summer without a vaccine last summer. So we are going to see the economy recovering in the summer. With the vaccine coming, it will be a double recovery, and that's why I'm so optimistic about the second half of the year. Nothing new here. Clearly, the winter will be difficult, and government support is crucial at this point of the game.
Is there such a thing, Benjamin, as a policy that allows for orderly delinquencies? In other words, to remove some support gradually so that those businesses or individuals that will need to file, that will need help, will do so. It doesn't all happen in a rush next June, for instance. Or is it better just to hold on, keep the support in place until the economy is providing a little bit of a lift underneath?
No, I think that a gradual approach is the way to go. We have to look at the segments in the economy that need the help and start to focus on them. The first response was everybody gets everything. And then we start tailoring it. We have to continue to tailor it to make sure that it is targeted. One, because we cannot afford it. We cannot just spend money like there is no tomorrow. As you know, Canada is spending more than any other OECD country. At one point, we have to slow it down. Second, it has to be much more targeted. When we start recovering, many people will do fine. Many people are already doing fine. So it has to be targeted. I believe that the way to go is a very gradual approach in order to avoid a cliff down the road.
Benjamin Tal, always good to have you with us. Appreciate your time. Benjamin Tal is Deputy Chief Economist at CIBC Capital Markets.